Hi guys and welcome to the trading show. This week we are gonna talk about
markets. Energy sector keeps going. Our portfolio. Orange juice surges. Tip of the week. Reversal on Ethereum. And the weekly rollovers.
and if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. Busy week on the markets, negative returns prevail, with the only exclusion of the energy sector linked to oil. Particularly negative returns for the Nasdaq, which, as you can see, has fallen a lot from the highs recently touched. The decline on the mini S&P is more contained, while the European stock exchanges in the last 5 days show positive returns. The decline of the bonds continues. This is the trend of the T-bond future. In the same way, also Treasury note continues to fall, and the Bund too is on important lows. The energy sector is still in a positive trend. Take a look at the gasoline future, crude oil future and heating oil. They are all on significant highs. On the other hand, the metal sector is negative. The meat sector shows mixed returns. Soft commodities and cereals are negative, with the only exclusion of pin oil and soybeans. Currencies are mainly negative, while Bitcoin, which has fallen from the highs, is in a sort of trading range right now. The weekly return is 4.6% and it is currently in a consolidation phase. As far as volatility is concerned, we notice a rising volatility on equity indices, but we are still at low levels compared to the long-term average. But we see a more interesting situation in the term structure of the implied volatility, because despite the contained decline on the mini S&P, but quite important on the Nasdaq, we notice a volatility that has not risen so much. You see, the value of the VIX index is not particularly high compared to the recent highs. And all this is quite curious. If we also see the term structure of the VIX futures, we find a term structure that is still in contango. This could mean that traders, at least at the moment, are not particularly worried about this decline of the markets. After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Hi everyone, from Alessandro Danos, and welcome to this new appointment with the analysis of our portfolio. This week I want to talk to you about a strategy on the orange juice future. This strategy is an unconventional, we can say, strategy because it is a seasonal strategy, and this is the first time that I show a strategy like this. It works on specific months of the year and specific dates, and in particular the long side enters during October and November, while the short side makes trades just on December. The strategy is both long and short, because on commodities we try to find specularity, so the exact number of trades both for long and short. And we can also say that this strategy is seasonal, and so it makes just a few trades per year. It makes, let's say, 3 or 4 trades per year. And so you need a very big amount of data in order to test this strategy. Here we can see that the TradeStation provides data on the daily chart, because here we are on the daily charts, from 1967. So it allows us to backtest our strategy in a more effective way on more years in order to evaluate better trades. We can see here that the last trades were very good. This long entered here, and also a short on December that made us earn $6,800. This underlying is mostly known for the film Trading Places with Eddie Murphy. And we can see from the equity curve that the strategy performed really well during the last years, while in the first initial years the strategy were, we can say, flat, let's say for the first 15 years, 20 years. And then the strategy started to work better until today. This underlying has a very nice scalability, as the big point value is $150, and the last price is $111. And so the monetary value of this underlying is very low, is around 15,000. Which compared with the S&P 500 future, for example, that is worth $150,000 to $200,000. And so it is clear that this underlying is more scalable than other futures. The only thing that may be bad for this instrument is that it is provided by the ICE, which is an exchange that has a trading monthly fee of around $120. And so, of course, if you guys do not have many strategies on these markets, so for example coffee, sugar, of course orange juice, and maybe cocoa, and so on, it may be not worth it to pay this amount of money to trade just one single strategy.
Hi everyone, and welcome by Andrea Unger. Today we will see more in the details the ETH USD, and we will face this product instead of the future, just because, as we said the previous time, the future is quite recent, so we have very few data, and we are not able on this very little amount of data to study the Ether future. But today we will see more in the details the bias intraday approach, and more in the details we will try to optimize at the same time two inputs. The first one is the long entry time, and the second one is the short entry time. So with the first input value we will try to close any short position and enter long, while with the second one we will close eventually any open long position and we will enter short. So I have already optimized everything, and here we have the table results, where on the right we can see the hours. And here, by the way, in multi-charts 1100 stays, for example, for 11 AM, while 900 on the right column here stands for 9 AM. As we can see here, it seems quite clear from the best results sorted by descending net profit that 11 AM seems to be the best result for the long side, while on the short side we have different possibilities, but the best one from the point of view of the net profit seems to be 9 AM. So in this case I'm a bit skeptical, just because in my opinion, it's not a bias strategy to enter at 11 a.m. on the long side and then to wait almost one day, so 20 hours, to enter short and to stay on the market short just for very few hours, so for 2 hours in this case. And as we can see here, we have different possibilities. So for example, we have also 3 a.m., 2 a.m., 4 a.m. and so on. And in this case, I will try to use another input, so not 9 a.m., but I will try with 3 a.m. just because I saw that I would lose a bit of net profit, but with 3 a.m. the drawdown would be the half of the first case. So I would renounce of a very few of the net profit, but my max drawdown would be the half, and this for me would be a quite interesting scenario. And in this case, we can also notice that 2 a.m. and 4 a.m. in the morning are quite good results, and they have a very similar drawdown and comparable net profit. So it seems that 3 a.m. it's a good area, and it should be also stable values just because the nearest hours are quite good as results as well. So I will try with 3 a.m. and having a look to the equity curve, it seems a quite good equity curve, of course. This, of course, is the equity curve of an initial strategy, so you shouldn't trade it with these default settings, also because of the average trade in this case. But we can clearly see that the long side does most of the profits. And this is more visible also from here. We can see that on this total amount of profits, I think almost 80 or 90% of them are made from the long side and not from the short side. But the short side is not that bad in general. I mean, it's not a good equity. It doesn't have a good consistency, in my opinion, because for example, in this case, in this phase, it suffered a lot, and also in this phase, also in this phase. But if we compare the movements of the short side with the buy and hold of the ETH USD cryptocurrency, is not that bad at all. In conclusion, I don't know if this strategy will be good, and I sincerely don't know if to advise anyone to trade this kind of product with this kind of strategy. This just because when I see that the long side works almost 22 hours and the short side it works very few hours, in my opinion, is not a bias anymore. Or I mean, if this combination with 3 a.m. on the short side would be good if developed more in the details, it may be a good combination and an acceptable combination, but the first combination with 11 a.m. and 9 a.m. it was not that good for me, just because it tries just to exploit the bullish buy and hold on ETH USD, and then I'm not sure I'm creating a strategy or I'm just trying to exploit the bias of the buy and hold.
Next week there are no expiring futures. However, the following week, on March 15th, currencies future will expire. For example, EURFX and Japanese yen. Typically, these futures are rolled a few days in advance, so at the end of the next week I suggest you to roll over the currencies futures. I hope you enjoyed this video. And if you want to learn more about the trading method we at Unger Academy use and teach our students, not to miss out on reading Andrea Unger's new book. It's called The Unger Method, the winning strategy of the 4-time world trading champion. And in it, Andrea explains step by step the trading method that let him win 4 World Cup trading championships and that you too can use to improve your approach to the markets and achieve your trading goals. And the greatest thing is that now you can grab it for free by just paying for shipping and handling. In the book there is also a rich bonus area with links to videos reserved only for those who get the book. Don't miss the chance to take your trading to the next level. Click the link in this video and get your free copy of the Unger method now. You pay only shipping and handling.